Hello. Today we're talking about how many Satoshis will there ever be. We always hear there's a set 21 million, 21 million Satoshis, or not Satoshis, but Bitcoin out integration. Why is this the case? So as you can see, this is set by the halving. So the halving changes every 21 210,000 blocks. And the difficulty adjustment set every 2016 blocks that set how hard it is to mine the next block. And every time the halving reduces by approximately half. So every 4 years, it goes from 50 Bitcoin to 25 Bitcoin, all the way down to 1 sat in 32 epochs. So here's the basic broken down into the equation, broken down into the simple into an Excel sheet. So there is the max supply is 2.099 quadrillion, 999 trillion, 997 billion, 690,000 Satoshis. That's the max supply. Work through the math of it. So first, the first Coinbase transaction for the first 210,000 blocks is 500 million. Let's set the decimals in here. Not 500 million, 5 billion. So 5 billion. 5 billion sats. And then there is so format details. So the total number of sats for this epoch is almost this should be half the total number of sats, or pretty close. Probably a little bit more. So gotta reach an equilibrium later on. So be 1 quadrillion, 50 trillion sats. And the purchasing power in today's number of sats is in today's dollars was 0.0001, and at that point it will grow at 12.5% per year for those first 4 years. And the next will grow at 25 Bitcoin, or 2.5 billion Satoshis per block, 6% growth rate. And then I know half again, that's why it's called the halving. Every time it halves, all the way down to get down to 1 sat for the Coinbase transaction. 3%. So at this rate, back in 2016, the supply increased to less than $1. And in 2024, the supply increase is less than gold. It was 3% back in 2020, and now it's went down to below 2%. And already in 2025, we see in the transaction fees go to a rate below 1 sat per vbyte. So that's very low. So, and then it says 2040, but it's happened to always at a quicker rate than you think. So, because usually the miners are more efficient and they can reach the 2016 blocks in a quicker amount of time than it takes in 10 minutes. So all this time is just approximate. Well, it probably happened a little bit before 2040, 2044. It's because it always runs a little bit ahead. So at this rate, so block reward will be less than 1 Bitcoin. So should be up here. Total number of sats per epoch. 100, so by 2028 exactly. This one's in the wrong place. Just drag it up. So the Coinbase transaction is less than 1 Bitcoin in the year. The year 2036. Probably happened a little sooner, but then it'll be less than 1 Bitcoin. It's only 10 years away. So now we are in the current block of should be 3.125. I was thinking this one ends here, so this actually should be up again. So it should happen in the 2032 because it will end at this time. So okay, moving on. A few bugs I have to work out in this spreadsheet. So as you see, after this, the purchasing power of today's Satoshis will keep increasing. This is just based on projected 25 compound percent growth rate. So it's a pretty low growth rate if you consider how Bitcoin performed over the last few epochs. So we just zoom down at the time of 2041 when the last block is mined. So you see, like, we get to an insane number, 162 million. Today's purchasing power per Satoshi. That's not even block, it's Bitcoin per Satoshi. So many times that by 100 million, you get the actual today's purchasing power, maybe 120 years into the future. That's insane. So it will compound, and as you see, they become much more harder and harder to create, and much more the supply grows at a much slower rate to a reach of practically zero. As you see, the sats per block grow, just they hit a floor over time, hit zero, and they actually turn to zero, and the Coinbase transaction goes away sometime around 2041, they say. So after 2041, Bitcoin network will only be protected by the transaction fees. And total amount of sats over time will hit a floor, or not a floor, a ceiling of 2 quadrillion, 99 trillion, 999 billion, 997 million, 690,000. So in the year 2141, 1 sat was the same purchasing power as 3.125 Bitcoin today. So approximately 190,000, even in this dip that we're seeing, 190,000 is what 1 sat would have. If you just have based it on what the purchasing power would be, which is pretty close to what are projected 25%. It'd be a bit less, so in accuracy, probably the compound and rate of 25% is a bit low what we'll actually see. So there, what you can get for 1/10 of a cent today will be worth over $210,000 in exponential in 2140, or approximately thereof, which is insane exponential growth. It's just like buying land in Manhattan over 150 years ago. You're not going to see that type of insane growth with any other kind of stock, any other kind of index fund or anything. So 210 million dollars for $1 today, just from compounding the value of those satoshis. With every other asset, there is no fixed supply. This is the only one out there with fixed supply. With gold, shares of the company depends on the board, just like how MicroStrategy, or Strategy now they call it. You can just print more shares whenever he wants to buy more Bitcoin. Just like how any company, if they're going on tough times, they'll just print a whole bunch of shares. Like think of what happened to GameStop during the craze. The stock ran up like a shot to $200. And what they do is they just printed a whole bunch of shares and expanded to their treasury. Put it all in their treasury. It was a gift from the shareholders that saved that company. So as you see, the shares are only dependent on the board and can be printed at will or decreased at will. Some companies are good and actually decrease their shares, but that only depends on the company and the people on the board, whereas Bitcoin is set in code. It is set in code that cannot be changed. When you understand that it cannot be changed, and you get the true nature of why Bitcoin is better than any share, any stock of any company. Gold supply grows at 2% per year historically. The dollar grows at 7 to 10% historically. So, and you can say the same about bonds as well. How much does the debt grow? It's probably the same as dollars. Whereas now, that is greater than Bitcoin's current rate of stock increase, and is much slower going onwards. So in 2028, it'll halve again, and the stock will grow at half of gold supply, and maybe 1/10 of the dollar supply, and it'll keep going down. Whereas these other assets or pieces of paper will keep growing exponentially. So this is the whole basis between the stock to flow prediction chart. Remember that, the big craze, and probably still ongoing from 2020. So we always used to say, oh, from the stock to flow, Bitcoin be worth this much. And it followed it for a certain amount of time, but then it broke. Probably because people don't understand Bitcoin and didn't understand it for the level, for stock to flow. If we continue to follow this prediction, we would see probably 1 to 2 million for Bitcoin for the cycle, but we're not seeing that. And the stock to flow prediction chart or price prediction model has broken. Just like all other models will break at certain points. Just like the power law will probably break in the future because there'll be some kind of insane blow off from inflation, hyperinflation probably. We don't know when this is going to happen, but it probably will happen in the future. Like nothing's a for sure, but it's a good chance. So the supply schedule is set, whereas in gold, the price can increase with more gold reserves. Just the mines will just extract more. You're going to start extracting out seawater or whatever, asteroid mining. As the price increases, we'll find a way, become more economical, to do more and more non-economical types of mines. Like there's so many gold mines out there. That's just the percentages are too low for the reserves. It's not economical to mine these mines at today's value. Over gold will decrease to $10,000, $20,000 an ounce. It'll make these very economical. And then they can ramp up existing mines, or existing supply of gold will then increase. So when you save in dollars, you're losing 7% greater per year. Whereas when you save it in BTC, you're only technically losing 1% per year. But that does not account for lost coins. So we do rule of 72 approximately. Let's write this right here. So that's like 72. Let's put this in here, 72 divided by, say, 7, be conservative. So every 10 years, your dollar, you loses half of its purchasing power. Best case scenario. That's just how it works. Everyone's taking out loans. As loans interest rates gets lower, it increases. So this actually grows up. So it's all based on interest rates. Inflation increases based on how easy it is to acquire the new money, how easy it is to take out a loan, how easy it is to write a new bond. And this will always increase. Always the government is in the deficit. That means they have greater expenditures than they earn from taxes. So you have to make that up by money printing. That's where this extra 7 to 10% per year comes in. So, and where was I at? I guess. So, all this Bitcoin growth rate does not demand. That's just what new Satoshis are coming online. Does not account for the true supply and demand constraints. for when holders don't want to sell. I know there's a lot of paper Bitcoin out there, but in the background, there's true constraints with Bitcoin. Only so many new coins come online. And if actual holders don't want to sell their coins for a piece of the paper, for imaginary fiat that they need to buy and sell stuff with, then it has no value. So then the actual dollars have no value, and the actual increase, the true supply, and the true demand for Bitcoin goes up in leaps and bounds. Unlike a company, we can't print more shares in a short squeeze, take advantage of the high price to fill their treasury, like GME. Like GME. So a short squeeze can explode the prices even higher. Maybe a year ago or so now, there was all this talk about a short squeeze on Bitcoin's price or exchange rate to dollars. This can happen so easily when there's not enough of the actual physical Bitcoin. Might be a lot of paper Bitcoin out there, but people actually want the actual real thing, the real Satoshis in cold storage to trade with. And people say, oh no, I'm not giving up my Satoshis or these pieces of paper anymore. This true short squeeze could occur. Just like the short squeezes that happened with silver back in the 70s. This saw a huge run up. Just like the short squeeze that happened with silver now. It's because of the shortage of actual supply to the real goods. This does not account for hyperinflation, where the dollar currency rate grows at 100% plus per year. So you can throw out this 25% increase rate here with ever a period of hyperinflation in the current dollar. And it's not a case of if, it's a case of when all these dollars fail, all these yen, whatever currency you're dealing with, fiat government issued currency, they all have to hyperinflate at one point or another. It's not a question of if, it's a question of when. So you know what's going to happen. And you know it's not a case of, it's just how it works out. So hyperinflation happened at some point. And this does not account for actual adoption increases in Bitcoin, moving to be a collectible, to the store of value, to minimum exchange, to minimum account. So now we're probably somewhere in between collectible and actual minimum of it and store of value. So very few people understand actual Bitcoin, actual Satoshis. So it's probably more in the collectible stage of things. People just gamble, trade with the ETFs mostly. But when it actually moves from into actual store of value like gold, then you'll see another 10x in the value of the Bitcoin. It moves from that to an actual value medium exchange, and people use it every day. You'll see another 10x in the value of the Satoshis. When it moves to actual medium account, everyone starts thinking, oh, this loaf of bread now costs 1 sat. Then there'll be another 10x because everyone will understand Bitcoin, everyone, and it'll just be ubiquitous form of money. And there's no human action that can increase the supply. It's enforced by game theory and incentives. Like no one will vote as a shareholder on the board of Bitcoin, the board of the code. No one will actually vote to increase the supply from 40 to 21 million Bitcoin to 42 million Bitcoin. Why would I have my amount of the value of my Satoshis? Makes no sense. Whereas that's the game theory behind it. Whereas with stocks, you can go and screw over all your shareholders and change your vote, change more can change it all. Whereas with gold, it can be all mined. Go out and go mine another 10 billion tons of gold, and they'll flood the supply. So if you've enjoyed this examination of how many ever Satoshis will there ever be, a total of, this is a big number, 2 quadrillion, 99 trillion, 999 billion, 997,690,000 Satoshis. Feel free to, if you found value in this video, feel free to zap me at andre@risval.com. Feel free to join my school. If you wish to learn more about investing and stacking sats, and to get the copy of the supply schedule. The link is right here. Thank you.